But one thing that has been holding this market up is consumer confidence, which translates into retail sales. And this week, retail giants Home Depot, Macy's, JCPenney, and Walmart are all set to release their earnings. So what can we expect? With us now is former Walmart CEO Bill Simon. Bill, there's a lot of questions, particularly after a bad day like today in the markets, but you still see consumer confidence high. Doesn't that translate into good retail numbers?
I think so. I think the consumer is very strong right now and buoyed by, tax reform, a little bit more money in the paycheck, and just generally good feelings, strong employment numbers. Having said that, I think Walmart last month at their investor day dropped back and punted and lowered their earnings. And so I would expect them to deliver the number that they talked about last month, which was about a 25-cent per share reduction from their target on average. I think their sales will be strong. Their earnings are going to be challenged by the e-commerce investment that they're making.
Hey, Bill, Jack Howe from Barron's Magazine. Walmart seems, I look at the past 2 years, over a 50% stock return after a while where the stock didn't do anything. It seems to just have this new mojo, and I'm looking for something that did that. I see that Jet.com acquisition. My thought is that has infused the company with this kind of entrepreneurial spirit on the online side. Would you agree with that?
I do. They stated a couple of years ago that they were really going to go after the digital business, and they've done that. They've done it really well. They bought Jet. They just invested in Flipkart. They bought Bonobos and a lot of other things, and they've sort of put some juice back in the business. On the other hand, 3 years ago, they delivered $29 billion in operating income. Last year, they delivered 20, and they've already sort of warned that they're going to be, below that. So it's come at a really steep price, but they're doing exactly what they said they were going to do. And if you're an investor who likes that strategy, you're buying.
Mr. Simon,
hey, Bill, I've owned Walmart stock for quite a long time, so I want to thank you for your tenure from 2010 to 2014 because you've significantly helped my retirement come at a much earlier age to that stock and your leadership.
It's all about you,
I want to ask you. To me, Walmart, one of their strengths is how they buy things, their acquisition teams, specifically about retail products. You see what China is doing as far as fighting against the United States right now. They're buying soybeans from Brazil. They're buying oil from Russia. Is Walmart right now, to get around these tariffs, doing the same thing, trying to find other suppliers so that they're able to get around these tariffs without having to raise prices on the consumers?
Well, I think that's the first move for almost any retailer. They're trying to rejigger their supply chain short term to try to get the product from the least expensive place that they can. If they believe that these tariffs are going to be in place for the long run, they'll have to start making changes to their capital strategy, and I think that's being discussed right now.
Bill, what about Amazon? You've been in the past pretty tough talk from you about breaking up Amazon as doing uncompetitive behavior, et cetera. Now you got a president talking the same kind of talk. Do you think that there will be change from the executive level to try to do something to break up Amazon?
Yeah, I don't know. I've not been an advocate of breaking them up. I've been an advocate of really looking at them hard and maybe having them report more detail, as in segment reporting. They just sort of smush everything into one number and report, and I don't think that gives clarity to the investor. I mean, if you really think about it, their behavior has been predatory almost by definition, right? 2014, they took the price of Prime up, right after Circuit City and some competitors went out of business. Linen and things have gone. They took another price increase to $129 with
and
Prime.
And the consumers still love them.
Is gone. Oh, the consumer loves it. It's awesome. I use them all the time. It's really great to have the stuff delivered. But, you sort of see them putting people out of business and raising their price and putting people out of business and raising their price, and that's just not right.
Mr. Simon,
but isn't that what they said about you, though, Bill? Bill, isn't that what they said about Walmart,
Walmart
though?
did it for years and years by being a good retailer, not by selling below cost and subsidizing it with income from the cloud and from advertising. Walmart just bought well, moved it well, shipped it well, sold it well, and did it better than anybody else. That's a different play than that's sort of like, if Exxon decided, I said at one point, to get in the restaurant business and use oil revenue to drive restaurant companies out of business.
Hi, Bill. This is Morgan. So question for you as it relates to Alibaba and Singles Day. I don't know that in the U.S. that people realize actually what a huge, huge day that is in China. I'm not even sure that it surpasses our Christmas sales. What are your thoughts as it relates to Alibaba, the competition that Walmart has from them from a global perspective, and, of course, their record-breaking days on Singles Day?
Well, I love Alibaba. You know, I've been in their stock for a while. I think it's just a terrific business. They've got a little bit of a different business model than Amazon, and they built it differently because they've got much more population density across their key markets than Amazon does, other than the main metros in the U.S. And so I think that they've got a better opportunity to move the product and to eventually one day make money. And I don't think Amazon has that.
Mr. Simon, this is Gary Kalpam. I'm basically the worry wart here. They just did a poll in America. 57% of adults have less than $1,000. And this is going on during a major expansion in economic growth. Does that worry you at all, especially with the fact that interest rates are moving up and that may impact economic growth going forward?
Yeah, I tend to worry a little bit too. My thoughts are, you start to look at the really robust GDP growth we've had in the last 12 months, and then you look at, we're below what economists call full employment, actually. So we got growth and we don't have enough people to keep the growth fueled, and, we haven't solved immigration yet. So there's really big issues to me. If we want to continue the growth, we got to get, off the schneid and get some real serious immigration reform so that we can keep the thing fueled and growth going. And there's a lot of issues that need to be dealt with. And I think right now it seems like the politicians would rather have issues to argue about than actually solve them, and that's troubling.
What do you think is going to come out of the midterm elections, where we now have a Democrat House and Republican Senate and Republican executive? Do you think there's going to be any change, any movement at all that would affect business?
I really don't. I think this outcome, it's gridlock, and businesses tend to like gridlock. I think what could be bad is, the noise that'll keep coming out of Washington, and the vitriol and the increased frequency of hearings now that the Democratic House will likely get engaged in could start to erode some of the consumer confidence. And we're talking earlier about the negotiations in Argentina that are upcoming. If China and our adversaries or our negotiating partners think that the administration is weak and doesn't have the support, it'll weaken our negotiating positions. And all of those things could start to put us into a little bit of a tailspin. We've got to be careful there.
Hey, Bill, let me ask you about groceries. Amazon was supposed to take over the grocery world. I see no signs that Walmart is slowing down there, and I suspect it's because people don't really want their groceries delivered to their doorstep as much as they want to click and collect like they're doing at Walmart. What do you think about that?
Yeah, I agree with you. Grocery's hard. It's really hard. It took Walmart probably 20 or 25 years to get average at it, never mind good. And, when Amazon bought Whole Foods, they not only bought a grocer, they bought a premium grocer, they bought a premium fresh grocer. And that's really, really hard to deliver consistently. And I think they're finding that out. So I think part of the problem is what you described, that people generally don't want to have their groceries delivered. We live in our cities, other than New York and San Francisco and some of our older cities, were built in and around the time and grew with the interstate highway system. And so people in Dallas commute to and from work, and they pass 20 grocery stores. They don't need it delivered to them. They don't want it sitting on their doorstep. But it'd be really nice if they could pick it up on their way home and not have to shop for it. So that's the theory behind click and collect, and I think that's a winner.
Hey, Bill Simon, thank you very much for joining us here. Appreciate it.